Okay, if you...
Can anyone hear online now? Apparently the techies just changed something.
Yes, can hear you now.
And we can hear you as well. So excellent.
Good. Thank you.
Excellent. I'm pleased that's resolved. Okay. Minutes of the previous meeting, pages 11 to 16. Committee, is it your wish that I sign those as a true record of that meeting? Have a proposer, please. Seconder. Thank you. And those in favour, please. Thank you. Well, you weren't there. No, that's fair enough. Okay, thank you. I will sign a copy of those in a moment or two. Okay, public question time. Mr. Remus is with us, and I know wishes to ask a question. So, Mr. Remus, welcome.
Yeah, I haven't prepared a question, and I don't expect an answer today. But I was interested in reading the minutes from previous meetings last night, and and I'm always particularly interested in the risk register. My particular interest in climate change, and on page 59, there's very properly a reference these days to the one of the risks as being underperformance of pensions investments due to ESG factors, including climate change. So very properly this is raised. Of course, what isn't raised is the fact that the investment themselves, or some of the investments from the council and from Brunel Pension Partnership on behalf of the council, are creating problems of climate change. And one might argue, well, that's not the business of this committee. I would have thought, though, that the pensioners themselves and possibly the council taxpayers of Somerset would be concerned to know that many of the investments that the council are behind, which may do extremely well financially, are actually creating a problem themselves. Now, I don't expect a debate or an answer to this, but I did want to raise this as an issue. Thank you.
I'm happy to give a brief answer. As far as I'm aware, we have no net zero investments currently. Every single investment we have generates some level of carbon emissions, as do, I think it's fair to say, all of us personally. We do have a stated ambition of making our investment portfolio net zero by 2040, which is the soonest within the Brunel partnership. And we are working with Brunel and our partners within Brunel to move the portfolio in that direction, although at this stage, obviously, that is baby steps rather than giant leaps. There is a plan.
Okay, thank you, Mr. Remus. Okay, item 5 on our agenda is the Independent Investment Advisors report. So we're verbal update.
Can you hear me?
Yes, indeed, we can. And welcome.
Good. Thank you. This morning, earlier on, I was getting a bit worried. As you've seen this time, I've really only put in some headlines in my written report, partly because I think this is, at the moment, we are looking at a very big picture situation where what's going to happen to interest rates and what's going to happen to growth in China are really driving everything that's going on. So I thought it was probably more useful, rather than diving down into things which the committee might not be interested in, to just put those headline discussion points in and then take any questions that the committee has.
Okay, that's fine.
Questions, anyone?
Questions from members? We're all nice and quiet this morning. Peter.
Yes, I'll break the mold. I was just wondering if you could expand a little further on your thoughts on China. It seems to me that you're describing a situation of adequate labour supply and unenthusiastic demand internally within China, but surely China has two sides to its economy. You would expect the youth unemployment to be feeding a sort of bullish investment for export work in China, even if the domestic market is slack for consumer response. Could you just expand a little further?
Sure. I mean, the big problem in China is graduate unemployment. These are not people who are going to expect to go into factories and make plastic widgets. These are people who have been highly educated, who've come to expect quite a decent standard of living, and are finding it's simply not available. So that's building up a lot of this discontent. Not that anything can be done about it, given the political state of China, but there are a lot of very disillusioned people out there. The other thing is that obviously demand has picked up for Chinese exports, but not as dramatically as all that. And elsewhere, people are looking to try and disengage one way or another from China. We've seen a lot of production move to places like Vietnam and the Philippines. You've got Trump, and I fear we're going to get him back again, saying he's going to put tariffs on everything. So while yes, there should be stimulus, and there is stimulus to external demand, it's probably not enough to get very excited about. And also the whole Chinese economic model has been built on the assumption that you will create a middle class by creating domestic demand. And that is just not there, not happening because of this lack of confidence.
Michael, good morning. Welcome.
Hello. I hope we're not all relying on China to pull us out of any problems, but it seems to me that globally, how are we going to expect continued growth when the reality of climate change is that we're all going to have to reduce consumption in one way or another, unless, of course, we all miraculously overnight become carbon neutral, which doesn't seem to be a reality on the horizon that I can see, unless different. So how is global growth at all sustainable, and should we be expecting it in the markets?
I think you should be expecting some global growth because you have overall some population growth, you have some growth in demand. People are not putting on hair shirts because of climate change and saying they're not going to spend any money. The other thing, of course, is that if there really is going to be a transformation to deal with climate change, there is a need for vast capital investment. I think governments are hopeful that the private sector will come on board for this. In some places they will, in other places it's going to need government support. But if you look at what would be needed to put in the national grid developments, things like that, you're talking about vast amounts of money needing to be spent, which in turn creates demand for workers, and thus demand from those people. This is also clearly, there's a question of affordability, but there's clearly huge pent-up demand for housing in a lot of places. And once you've got a house, then you have to fill it with things. So I think it's, I don't think growth is going to be dramatic, but I think growth is going to go back to the kind of trend levels we've seen of the sort of 1 to 2%.
Yeah, I sort of agree in principle that we need to grow certain areas in order to reach our targets. It's a bit of catch-22 because at the moment, if we do grow, it'll be emitting carbon in a big way, and that's something we can't. So it's a bit like accelerating, but only having a limited amount of gas in the tank. And at the moment, if the government spent what it should be spending on infrastructure and in renewable energy and completely decarbonising the country, I think we won't have the either the the capacity to invest at that level, or the enthusiasm, as far as I can see. And so it's all hypothetical. I think you're right that growth is possible, but it will be the wrong type of growth if we do it too early and without decarbonising. And that's, for me, I find quite a depressing scenario.
Well, of course, the other thing is that to make these investments, you're going to have to, in the short term, increase a lot of carbon because if you're going to build a wind farm, you need vast amounts of cement. Cement is one of the most polluting industries there is. So it is one of the ironic things that if we really want to move to decarbonisation in the short term, carbon is going to increase.
Thank you.
It is a difficult place to find ourselves, but you're quite right. If the rush to decarbonise, which is a good thing, will increase our short-term carbon production. But until we find, I don't know whether fusion will actually come in my lifetime, but if it does, then that may well help. But however, you will need lots and lots of these plants. I mean, to upgrade the national grid to take the power from its production source out to everybody, that level of investment can only be led by government. And it's just too big otherwise. John Cook-Wilburn, John.
Oh, there we are. That's better. Yeah, I was going to say, well, you've only got to talk about growth. And I think that the major growth is going to be places like Africa and the third world. I mean, if you travel to Africa, you see incredible amount of building. And the thing with growth, I think, is that with places like Africa, they're not going to say, oh, we can't do any growth here, but you'll have to remain poor. They're not going to do that. They want to grow, they want to succeed, they want to expand. And that's where they are, and that's where they want to go. So I just wonder what you think about the expansion in continents like Africa and South America. That's where the expansion is going to be. And they're not willing to stay where they are, to be honest with you.
The trouble with that from what we're trying to do here is that there aren't very many investment opportunities, certainly in Africa, to do things at the moment. That may come. Both Africa and Latin America have been places where I think in most of my working lifetime, it's going to be the great growth thing. Brazil is always going to be the great economic powerhouse, and it never quite gets there. So I think in terms of looking at the geopolitical picture, I think you're right. But in terms of what can we actually invest in and get a decent return, that's more difficult.
Okay, John, are you happy with that response? Okay. I can't see any other councillors wishing to speak on that item. We're just there to consider that report and make our views. So thank you for that. And no other questions? Yeah, Viv?
Just a quick one from me. Is there any lessons to be learned from nations with AAA ratings, such as Canada and other places in America, to see which industries they're actually investing in and then perhaps following it up?
Well, the US no longer has a AAA rating. I can't remember about Canada. I'm not sure whether it does or not. But I mean, in Canada, you have obviously the dreaded oil and gas is very important still to Canada. Other minerals. The US dominates the tech and healthcare sector. I think the consensus there is it does so partly because of the size of the country, but also because going bankrupt is a perfectly respectable thing to do in the pursuit of profit in the US, not so much elsewhere.
Okay, colleagues, any further questions? Okay, that report is to be noted, so I take it we're going to note that report. Okay, we're going to move on to item 6 on our agenda, which is the review of the investment performances, pages 17 to 36 on your papers. Are you leading on this, Anthony?
Yes, I'll I squiggled it, so I should probably lead on it. As usual, I'm happy to take questions on any aspect of the paper, but I will restrict my comments to the combined fund overall performance, starting on page 31. It was a quite strong quarter for investment returns. An overall performance of 5% for the fund is very good. It's slightly below the benchmark. As much as anything, that was due to the underperformance in the private equity area and on the global high alpha fund, which is our largest exposure. But generally speaking, we're now in a better place than I thought we were going to be. So calendar year 2023, our performance, our investment return was 11.6%, which is well ahead of the figures included in the actuaries' calculations and our current spot absolute return target. So the graph at page 33, you can see we've made considerable progress back towards that target line, and have a much better chance of being somewhere close to it or above it come the next valuation in March 2025, which is not that long away now. It's only a year. Seems like only less. Yesterday I did the last one. And that's probably all that I wish to pick up on. I will just mention it's not in this set of papers, but I believe I haven't quite finalised my figures for the end of February, but I believe February was our first month end where the fund was worth 3 billion. We've cracked the 3 billion at last. Whether it lasts or not is another matter, but.
I think it's a real milestone, £3 billion pension fund, Mark, and we would hope that you are able to maintain that and indeed increase it further as we go forward. Colleagues, questions for Anton? Mike.
Sorry, it's just a question about the underlying reason for the underperformance in the private equity sector. What was underlying that? Some of the figures in the report were quite stark. I've lost the page number now, but in fact, it's 13.4 from the report. The one-year performance for the Neuberger fund was 18% lower than the benchmark.
So there's two elements going on here. One, private equity of its nature is harder to value. It takes longer to value. So when you have some sort of market event that spooks markets, with a listed asset, the market gets spooked, the price goes down, you see it tomorrow. With private equity, that takes a lot longer to feed through. And I think it's also fair to say that certain elements of the private equity market lever quite heavily. And therefore, the build-up of interest rates globally over the last 2 years, it's now reached the point where the private equity market is feeling that to a certain extent. The other thing, so that's a broader context. The other thing you get with private equity is when transactions take place, because it's harder to value, you sometimes get funny effects of that transaction that affect the price, and then over the next 2 quarters they'll even themselves out. And there was definitely some of that happening in the Neuberger fund. As they return funds to us, the way we price them and catch up with that tends to mean that it's held in our books at an elevated price. We sell it at book cost because we don't have something better, and then it recycles itself into the price the following quarter. And but the following quarter they might have another sales. So I would encourage you very much with the private equity assets to look at the longer term numbers. Yes, the 1 year numbers for private equity are not what they are in the public markets, and that's going back to my earlier comments about sort of timings and debt loads. The fact that we had a very bad quarter, I'm sorry, it's maths more than investment.
Thank you for explaining that. I suppose the overall fund is quite de-risked in terms of exposure to that asset class anyway, isn't it?
Exposure to private equity should always be, so it's an asset class that should provide better long-term returns, but it is with higher risks. It certainly has much higher liquidity risks. We can't just get our money out quickly. And so it should always be a considered and relatively small portion of the total.
Okay, Peter, please.
Thank you, Chairman. Yes, I think the point plays very directly to this committee's response to the government's consultation on whether private equity should have been mandated at a significant proportion of funding within pension funds. It's quite clear to me that the turbulence effect is going to make it difficult to look at the underlying performance, even if the returns in the longer term balance out better. There is going to be more noise on the signal, and it will be harder to actually track the true performance in a pooled fund that's got a large proportion of private equity because of this effect. I mean, I hate to say I told you so, but we did. We told you so. It makes it difficult to discharge our duties to be careful if there's this random thing going on in the corner.
So, I mean, I would have picked it up under a later paper, but I'll pick it up now. So the government's consultation on that, as I reported at the last meeting, they're minded to push forward with it, but it will be on a comply or explain basis. So if we don't want to do it, we will be able to. It's unclear as to whether there would be sanctions if you chose and it depends on how hard you push back against it. The other thing that I think is a pertinent question at this time is that we have a limited amount of time to the general election. It is far from clear that the government will issue new guidance or legislation before the election. I'm not sure all of these issues are party political, so I'm not saying that a different government won't continue to pursue them, but there may be changes in nuance, if not complete change of direction. And you know, by the time if the guidance or legislation isn't put in place by the time of the election, I think you can easily then assume that it'll be at least another year before a new government picks it up, solidifies its own views on it, and then puts them in place. I think what I'm saying is that we could well just sit around and not have to comply with this for some time, because I'm just not sure they'll get around to putting anything in place, let alone what it might actually be. Because again, with comply and explain regimes, the particular wording of how the regulations or guidance is provided makes quite a lot of difference to the nuance of how we might choose to react to it.
Thank you. Noting the potential for some comfort, I still think the underlying point is there is actually a logical reason why a pension fund would not do what the government is intending to do, or would take specific measures to isolate the effect so that it can be differentiated from other effects on the fund. As such, I think we need to ask our managers to maintain a watching brief on this and be prepared to make a logical argument, even in the case of an incoming administration that's considering the matter and whether it wants to continue in the same direction. A large fund having a powerful argument and arriving in a timely fashion with well-prepared numbers is likely to be well received by an incoming minister.
The LGPS community collectively is consistently engaging with government with the message that the LGPS is a pot of pension money to pay pensioners and not their slush fund to do with as they deem fit, or to prop up government policy, however well thought through or otherwise. But I certainly don't expect my ultimate desire that the government just butt out and leave us alone. I don't expect that from any government of any type. Once ministers and civil servants find that they can meddle and fiddle, and they rarely go away and say, no, we've got it right now, we'll never touch this again. It's a fact of government and how governments operate, I'm afraid. And if that's slightly cynical and depressing, I'm sorry.
I will come back, Chairman. I think I'm perhaps not so cynical. I believe the civil service advice to government is based on evidence, and I'm suggesting that we make sure there is very good quality evidence, because at the moment our senses are that this isn't a good direction. We may know more because we've been at it and focused on it for a long period of time. Here is a good month, which is a good example that shows at the moment, a strong argument in favour of our position. I still think we should ask for a heightened awareness and tracking of data so that the argument can be crystallised to be impactful.
Okay, I think Anton was quite clear in his view as our service manager for investment. I think there's very little doubt that Anton will be keeping a very close eye on this and making the appropriate noises to government in response to the latest suggestion on how we use our money for the benefit of our pensioners, which is after all why we are here, to ensure that we have a sufficiently well-run fund that we can pay our pensioners when it becomes due. They've paid for it all their working lives. I would expect us to make sure that we are in a position to do that as we move into ever higher numbers of pensioners requiring our funding. And I have no doubt that Anton will be taking that on board, and at the back of his mind will be, I will need to regularly report that the latest conversation with the government of the day, whoever that may or may not be, will be part of his reports in future. Anton's not violently disagreeing with me, so I think that's a reasonable truth.
Again, as I've pointed out previously, we are going to be looking at the investment structure over the next year as a sort of, although in theory we can look at it at any time, it will be a formal piece of work that we will arrange for the committee, and there'll be some offline days to help us work through that. And if the government clarifies its position in regulation or guidance through the year, then obviously we will debate that against the specific requirements as and when they come up. And if not, we'll just do that exercise without them and put something in place and wait for them to catch up with us.
Hang on to the information until we need to use it. That's fine. Thank you for that, Anton. Members of the committee, any questions? Can't see any in the room. Any online? Welcome, Liz. I see you've joined us.
Good morning, Chair.
Good morning. Was there a question you wish to raise?
I just wanted to ask, Chair, as I'm both cynical and concerned. I wonder whether you as a committee might want to consider how this matter is covered under strategic risk management for the council.
Under the pension funds risk register, I think it's the first risk on the risk register is the risk of regulatory change.
Okay, and
So
Chair, so it's well flagged. Thank you, Chair. I'd expect nothing less of Anton, of course. I just wonder how that feeds through to the overall strategic risk management for the whole council. I should know that answer, of course, but I don't.
So, strictly speaking, the risk to the Somerset Council is the same to any employer, in that if the investment fund doesn't perform, then all other things being equal, the hole has to be plugged by higher employer contributions or deficit recovery payments as applicable. So that's the feedback to the council, and it's a very slow burn. I suppose strictly speaking, there is also some possibly, I mean, there are reputational risks, things like that. There is the possibility that because Somerset Council is the administrating authority, they've delegated that authority to this committee, but ultimately, if the committee goes rogue or does something, then I suppose the council could be sanctioned. It seems a very odd and far unlikely scenario, but I'm trying to think of all the ways it could feed back to the entity Somerset Council, and that's as far as I can go. I mean, it is fair to say that Jason definitely wears two hats. So he has the delegated authority from this committee to provide me and services to the committee and run the fund in a general sense. And sometimes that might lead to a conflict of interest with his role as Section 151 of the council and preparing the council's budgets. And I try my best to represent the fund for him in those discussions and point out to him where I think he may or may not be coming close to a line, if that ever occurs.
Thank you. Thank you, Chair. I know that we're having a revision of the medium-term financial strategy this spring, and I know that we're looking at risk through the audit committee. So whilst I wear my own hat as a member of the local government pension scheme, so I should declare that, I will ensure that I make sure everywhere I go, working on strategy, and I think the chair of audit is with you on this committee too. I think it falls to all of us to ensure that we join those dots everywhere we possibly can, particularly on risk at this time. Thank you.
And obviously, in terms of the pension fund's direct impact on the MTFP, I do have sort of conversations with Jason from time to time. At this particular point in the triennial valuation cycle, those aren't particularly pertinent because the contributions through to 31st of March 26 are set already, sort of in stone, or at least in stone, subject to someone smashing it. As we get closer to the 2025 valuation exercise, I will be in much more regular contact with Jason and Nicola about the budget impacts of the post-March 26 contribution rates. So there is a direct feedback loop there to make sure that the council as an employer understands the impact of its commitments to the fund on its long-term financial well-being. And obviously, part of that contribution is at 20% of salary, or 20.1% to be precise currently. So obviously, as we work through the current year and the process of reducing headcount for Somerset Council, that leads to a direct pension savings.
Okay,
Understood. Thank you, Chair.
Okay, I've got two councillors who wish to ask. Michael Dunk, please, first, and then Mike Hewitson, please.
I just think it's worth noting at this point that we're only at 90% roughly of our projection, which I feel is obviously a catch-up game all the time, but it would be nice to be nearer 100%. And I think any threat from government or otherwise of us not being able to make those targets would be, as you already discussed, would be viewed very poorly, because we do have to, without impacting on the council, who is obviously already impacted and not receiving much help from the government as it is, we can't put that at any risk. So I think we do have another a sort of point to make, and that's that we're not reaching our target already.
And through a different arm of government and different pieces of regulations, there's something called the GAD 13 review, GAD being the Government Actuary Department. So post each valuation cycle, the Government Actuaries Department review all of the LGPS actuaries' prognostications, try and standardise them, and then try and browbeat those that don't think are making sufficient effort to be well funded. So one arm of government is very strongly encouraging us to manage our solvency well and sensibly, whilst other arms of government are asking us to take risk or not take risk in a way that fundamentally affects that without necessarily understanding the feedback. I suppose one other comment is that the rate at which we try to achieve 100% funding is something that where we are mindful of the impact on that on our employers. Because obviously we could just turn around and say, we wish to be 100% funded in 3 weeks' time. Please turf over £500 million, please. I'm not sure that the Somerset Council's budget, or indeed any of the other 150 to 200 employers in the fund, would take kindly to us doing that. So we do try to find a balanced way between a reasonable path to full funding for the fund, whilst being conscious of the impact that we will have on employers. It is balance, and we're doing reasonably well because we did have a 25-year plan to reduce that. That was part of the, I think that was the 2013 valuation. And we are now down to sort of 9 years on that and making progress. So over the last, since we went to 25 years, we haven't then kept it at 25 years. We have actually each year reduced that, and we are on plan, as it were. And I'm hoping at the 25 valuation, we'll be able to keep that going. But slightly depends on where the numbers end up.
Okay, Mike Hewitson, please.
Thanks, Chair. I was going to ask a question on risk because Liz brought it up. I can ask the question later on the agenda if you prefer. And that was essentially to explore the risk a little bit more of the council's transformation programme with respect to the pension scheme, what impact that has. You've mentioned a moment ago, Anton, that potentially it reduces the liability going forward because we've got less people. Sorry, it reduces the contributions in the short term because you've got less people employed. But obviously, if you've got more people then drawing their benefit, if they take voluntary redundancy, what impact does that have on the overall scheme?
I'll pick that up under the financial forecast paper.
You can concentrate then, Mike. Yeah, okay. Peter, did you want to come back? No, okay. I can't see anyone else asking questions. Nobody online's got their hand up. No, good. Okay. Yeah, I think we've considered that. Anton's fielded all the questions. So we're going to take the opportunity to move on to item 7 of our papers, which is on page 37 to 44. And that is Rachel's report. Yes. Rachel, good morning and welcome.
Good morning, Chair. Good morning, everybody. So I'll just give you a brief overview of the paper, which is our usual administration performance for Peninsula Pensions. So as most of you will be aware, we measure our performance against statutory requirements within the Occupational Personal Pension Scheme regulations and disclosure timescales. So this report relates to Q3, which is September to December last year. This Appendix 1 gives a breakdown, a further breakdown, but the overall performance for the team during that quarter was 93% overall, which was 1% higher than the previous quarter and 2% higher than Q1, so it's going the right way. And overall for our high priority procedures, which include retirements and pension benefits for survivors, it was 94%. So obviously we focus on those ones, the actual payment side of things. During that quarter, the team also recorded 26 compliments from scheme members. There is in Appendix 2, you will see the outstanding work that we've been working on. So that just basically shows that we have at the moment 4,100, not at the moment, sorry, correction, at 31st of December, we had 4,171 remaining pieces of work to action, different calculations. And out of that 4,171, there were 2,453 that are actually awaiting replies either from employers or scheme members themselves. So we have at that point 1,718 pieces to actually action. Appendix 3 just shows that we try to, obviously with resource on the team, just to make sure that the resource levels are right. So we compare the work that's come in for the same 12-month period as for the current 12-month period. And the usual trend over the last 2 years, with one exception for one quarter, has been an increased amount of work being received, and that has followed the same trend for Q3 as well, as you'll see on the chart. The paper also includes, as requested by the pension board, under Appendix 1 and the performance at the bottom of that, it gives a little bit of a breakdown of any complaints that the team have received. Numbers of complaints and a little brief overview of what those complaints were. The board just wanted to gauge what type of inquiries we were receiving. You'll also see that we just made mention in the report as well about McLeod and the age discrimination remedy. The team is still working very hard on that. It's not straightforward. It's not been easy. And we have, as well as the local government 2 funds, we also have administration, as I'm sure you're aware, for the police and firefighter pension schemes. So it's a big task that they've taken on. We do have a project team, and we also have one of our staff members is on the technical national group, local government group, which is really helpful because she has input into some of the guidance that comes out. Although we've got the legislation and a lot of the guidance, there are still gaps in that. So we're waiting for a bit more clarification on specific areas. And I think it's as usual, really. Once you actually come down to do some calculations, there's always some unusual calculations that haven't quite been catered for in the guidance that's been given out by the local government association. So having that input with the technical team is the national technical team is very useful. There's also employer updates included in the report under point 5. I'm not planning on going through those. That's just a summary for that quarter. And happy to take any questions.
Okay, committee. Do we have questions for Rachel? Yes, Paul.
Thank you. I've got 3 questions, I think. One is I wonder if you could just give us an update on staffing. I know that had been an issue previously, and then you'd successfully fully recruited, but I'm interested to know if that position has continued. The second question is in relation to performance. Obviously, the overall performance has been very good and continues to improve, which is pleasing. But I just wonder whether there are, or if you've got any data on long-standing queries. So the fact that we're running at 95% doesn't mean that there isn't that sticker bunch that has been sitting there for a long while. And I wonder if we could have some data, potentially not today, but maybe next time, on whether there is any age analysis there that might be of concern to us. And thirdly, just on McLeod, I don't know if that's something you would want to bring back at some point with a more full update, because clearly it's an ongoing issue, one that we would have expected to have completed, that has some implications, and an update on those implications and an end point might be useful for the committee.
Yeah, of course. Okay, I'll take those in turn. So staffing, we have still a full complement of staff. So we had, the reason I'm hesitating is because actually one handed their notice in yesterday. So we have, as at now, a full complement of staff. We also, with the staffing, there's obviously, it takes quite some time for the particular staff that are actually dealing with the various types of local government calculations to do with the pension schemes. It's not just retirement calculations, there's potential transfers in either from external companies or from other authorities, and also transfers out equally to both of those. So there's various types of calculations involved, and it does take time for staff to get to the point where they're fully competent. But we do have a training and technical team, and they have a training plan for the year. So it's going very well, but obviously we don't get full capacity from those new staff until they've been in post for a reasonable length of time. With the performance and the age analysis, I can certainly come back with some more information on that. Yes, absolutely. The paper that I'm going to be talking about a little bit later in this meeting also links into that level of performance. So I won't mention too much about that now. I'll do that shortly. But yes, I can certainly come back on age of any particular outstanding sort of lower priority work, if you like. And then the third point with McLeod, absolutely, yes, we can bring that. I'm leaving it on the paper because for that purpose, just to give an update each time that we speak to you. I mean, the position is that the remedy is in place and was in place from October, but we do have sort of an 18-month period to go back and recalculate all the different people that have been impacted potentially. So it's not something that came in October and happens overnight, because obviously there's a lot of pensioners, a lot of members that we need to look at and gauge whether or not they are impacted. And we are confident that because we're in the regular webinars and with other administrators, you know, there's a lot of other LGPS funds, everyone's in the same position. Nobody can, if there's queries on a certain aspect of a calculation, the whole of the UK have that same query. So we are we feel a strong position with it and are as far ahead as we possibly can be at the moment. So absolutely, I can definitely bring the regular updates each quarter to you on where we are.
Do you want to come back, Paul? No? No? Okay. Michael.
Just a very, very small detail, really. You've got 8 complaints, which is, I think, quite a small number anyway, but it says only 3 of them were actual complaints. Now, I've been on a website before where I couldn't find a way of communicating with someone and had to put my comments through a complaint in order to get them lodged at all. Have you had a look at that mechanism that people, how come they've had to use that or felt they had to use it, and why are they making that mistake? Is it something that's an obvious tweak you could do to the website that would make it easier for them to see that they
Yeah.
don't need to put a complaint in, they can just ask a question.
Yep. The best way and the way that we encourage members to contact us is through the online portal, because there's various categories on there. And yes, we have made a tweak because the complaint was right at the top of the list, which probably wasn't the most sensible. So I think a lot of people were just jumping in and pressing, the first one on the list, basically. So that has moved down the list because there's tried to break it down into as many clear categories when there is an inquiry as possible. So we're doing our best with that, and obviously we'll jiggle it around as we go ahead just to make sure that it is clear, and if it has been misunderstood, we do try to find out why.
Thank you very much.
Thank you.
Any other questions or queries? I'm not seeing any hands up or anyone online. Okay, Rachel, thank you. We'll look forward to your next report in a few items' time.
Thank you.
Okay, we can move on to item 8 on our pack today, which is our business plan update. This is back to Anton.
Indeed, thank you. So just quickly running through the items for progress since the last report on page 46. I think we've already discussed sort of government as such. As referred to under 4.2, 4.3, my understanding is that there is going to be fresh guidance on what we have to include in the pension fund annual report. Regrettably, the guidance will not be allowing us to slim it down. I fear quite the opposite. But I haven't actually seen it yet, so I can't actually know what it is. I believe it will include the things that the Chancellor referred to in his budget speech around us reporting on how much we invest in UK. As I pointed out to Councillor Duncan discussion just beforehand, that tends to be reporting on where the domicile of the business is, not necessarily where it actually does business. But never mind. Although I find those requirements slightly odd because I think they're already adequately covered in the existing guidance, and I think we already display them. But so that's to come, and I will obviously, my understanding that it will be on a best efforts basis for the annual report I produced this year, and then a requirement for the following year. But I'm relatively comfortable from what I've heard that the vast majority of it is already covered in our document, and we shouldn't have to make too many additions. I can confirm that the 22-23 audit of the pension fund is complete. That was signed off at the Somerset Council Audit Committee in January, and that therefore the final version of the annual report, including the auditor's opinions, has been published in the correct way and circulated as necessary. So that's complete, which is nice because I've already started the interim work on the 23-24 audit, and I believe, having sent the email to committee services this morning, that the audit plan, the formal audit plan of Grant Thornton, is going to audit committee in 2 weeks' time. So that particular one never stops. And I've had some queries regarding the South Somerset District Council audit just to keep me tidied over in the interim. And then just to sort of warn committee that shortly I'll be looking to circulate an email to request sort of diary time from you for a first session in that process of building towards a new investment strategy statement, which will formally probably come to the March committee meeting next year. But as I said, we'll have several sessions. The first session will be sort of 80% training and 20% consideration, and then we'll build through to sort of 80% consideration and 20% training as we draft the sort of move towards getting opinions from you that will allow me to draft the document that then hopefully you find suitable without too many additions when it comes to formal committee in due course. But I'll be looking for a sort of morning sometime in late April or May, I suspect. I need to get my head around my own diary before I come after you for yours. And those sessions, I'm happy to work at your preference as to whether they are in person, online or hybrid.
Okay, well, I'm happy to confirm that the chair of the audit committee is awaiting that with bated breath, and we await the training opportunities and the opportunities to help formulate the plan. So that's encouraging. Any councillors' queries or questions, please? Peter? No? Okay. I think it is to note, I haven't got anybody online. No, that's fine. In that case, that is report is to be noted, and we will move on to item 9 on our agenda, and that, of course, is Anton.
Yes, so this is the regular finance and membership statistics update. The membership statistics are not displaying anything particularly interesting over the quarter, and as always I would encourage you to look at the long-term trends. Somerset Council do make up, I think it's something around half of the active membership, so it will be interesting to see as they work through their programme of reducing the workforce, how that impacts the figures. I use the word interesting in many contexts there. Is there any questions about the membership before I move on to the finances? No, excellent. You will note that as Appendix A, we now have managed to get some information out of MSD at the position at December. I think it's fair to say I don't have quite the confidence I would perhaps have had once it's been in place for a number of years. We are still playing catch up, but there is some data in there, so that's, yeah, and I have been able to get something that doesn't look outrageously wrong. I would suspect most of the large variances around recurring pensions, lump sums, contributions and recoveries are far more likely to be around coding issues and the speed at which financial transactions are coded into the ledger than I expect variances of that size at year end, but I am uncertain. We are doing our best and it is improving, but closing is going to be interesting. It always is when you do it for the first time on a new system. But we are getting there. I am a lot more encouraged than I was when we spoke in December. And there are 3 IT issues, one of which is largely closed, one of which I'm expecting to be closed in the next week or so, one of which is had to be referred back to Microsoft. We have a problem when we raise an invoice out of the system that it isn't actually then being sent anywhere, requiring manual intervention. But that is a problem that we've had to refer back to Microsoft. Luckily, it's only affecting the pension fund and not Somerset Council. But I'm not. It's not good. But we do have a manual workaround. We are able to physically get invoices out. We're just playing catch up a bit. I see. I appreciate Councillor Hewiston is intimately involved as chair of the audit committee. I detect a certain amount of sang-froid about MSD and its progress.
Yeah, my head was in my hands as I as I recovered from the peals of laughter from the latest problems that you've raised there, Anton. So thanks for bringing it to our attention. Can you just let us know when these sorts of problems are resolved? Because it's difficult for us to know, looking at looking at reports, if there are underlying data quality or data management issues which may be affecting the quality of the report.
And I would say the vast majority of this, having experienced the same when we bought SAP in 16 years ago, you know, a lot of it is just the teething problems that you get when you bring in a new system. The timetable in which we brought MSD in, because we needed it for Unitary, probably didn't help. But my experience compared to the bringing in of SAP, I would say is probably fractionally better, especially when you take into account the wider context in a Somerset Council context of it being as the start of a new Unitary. As we work through the audits or the production of the accounts and then the audits, my view might change. We'll see. But I mean, the pension fund part of MSD, which is completely segregated, it appears as a separate company. It has different access rights. It has different coding. It's completely separate. Because we have vastly less codes on it, and we're trying to do vastly less complicated things with it. So MSD is great because it allows you to attach as many different pieces of information to a given event as you like, referred to as different dynamics, and that's why it's called MSD. For the pension fund, we just don't need them. We've stuck with the two that we had previously. So it's a lot simpler, and therefore there's a lot less, in theory, that can go wrong.
In theory, there's less to go wrong. That is encouraging. I wonder, Anton, if you feel it would be appropriate that you did a one-page report to go on to the audit committee when those issues have been resolved, so the audit is also fully in the picture. I'm just thinking about making sure everybody that needs to know knows in an appropriate manner. I don't think it needs a full report. I think it's something that needs just to be noted for clarity and for consistency.
And if I forget to specifically come back on resolution, one, ask, but two, it's fairer to assume that if I don't say anything, I am happy, than if I do say something, which tends to mean I'm not.
That's fair enough. What I'm trying to do is make sure that we're closing the circle and everybody that needs to know knows. Mike.
That's fine, Chair. I was just going to say I'm happy if it's reported back by exception if things haven't resolved, but we just need a way of closing the loop, as you say.
And this paper does, because obviously if we're having problems invoicing, then sooner or later that will appear in figures somewhere. I mean, for instance, I suspect we will have more outstanding debt at year end for the pension fund than perhaps is the case historically, although historically it tends not to be a particularly big figure. I think last year was somewhere in the sort of mid single digits, sort of £5 or £6 million, which on a £3 billion fund with 135 million pounds of turnover effectively a year isn't a particularly large amount. But it is, I would expect more this year end because I believe some of those invoices will not get out quickly enough to get paid by year end.
Okay, that's obviously, as Mike said, we need to close that circle. So I'll leave that between you, Mike. You'll get to report from Anton at some point, I'm sure. And thank you for that, Anton. Any other questions on this item? Not seeing any. No. Okay, we're going to move on to agenda item 10 then, which is the review of the pension fund register. I know we spoke briefly about this earlier, but and
as is common, this is standard item. There have been no changes in the risk register since the last committee meeting. There is nothing specifically I feel the need to draw to your attention, but as ever, I'm more than happy to take questions.
Okay, committee, Mike.
Thanks, Chair. So I did have a question on. So vulnerability to long-term staff sickness and or retention and recruitment issues. I'm conscious that we are about to go through a transformation programme. I don't know how large the team is that are supporting you, Anton, but it seems to me that the critical vulnerability for the whole council at the moment is the level of expertise that you have personally, and I want some reassurance around the skills and knowledge within the team that supports you being systematized wherever possible and not necessarily down to individuals, as much as I hope that you're not planning on going anywhere for the long-term future.
Well, that depends on how nice you are to me. No, seriously. So whilst it is structures are sort of a live debate, and I'm still waiting to find out where I fit in the structure and et cetera, et cetera. The manpower that is provided to the fund is directly paid for by the fund. So every year there is an invoice that is raised by Somerset Council and paid for by the pension fund. Indeed, the 23-24 one, I think, was paid this week, which is common. We usually raise it in sort of late February and get it paid just before year end. And so there should be no implications in terms of the overall resource that's available to the fund of whatever structure is created. Now, it's possible that the structures that create slightly impact that or not, but I've been doing this long enough to know and sort of lived through enough structure reviews to suspect that it won't have much impact on the resource per se. The team is quite small, although it is about to get bigger, and I'll come back to that when we talk about financial forecasts and resources in a later paper. It is an inherently difficult area providing sufficient cover, because it is, and this is sort of taps into the council's treasury as well, which I'm also responsible for and is part of the same team. We can't be a team of 20 just so you've got 20 people just in case one of us walks under a bus. So inherently, you are going to concentrate the skills in a relatively small number of officers. The age profile of the team isn't necessarily as diverse as it might best be, and that is a conversation I've had with Nicola Hicks as the person most directly responsible for the structure. And until I'm assuming that once the tier 5 for finance is clarified, which I might or might not be in, I don't mean as in I might not exist, but in the last draft I was in tier 6, not tier 5. But once I think I'm right in saying that once that tier is done, then individual teams will start getting looked at as individual teams, and then I'll know the answers to that. I mean, it's slightly tied up because we are doing work for the Treasury as well, and some of these issues reflect on the Treasury as well. It may well come down to partly whether Somerset Council can afford additional people as well. But I have raised it that it is a risk on our risk register. I first had that conversation with Nicola 9 months ago. as soon as she was sort of in a position to start saying, she emailed out and said, tell me what you want, what you think I should know about your teams so I can bear in mind for structure. And I said, we're a small team and we're getting old, to paraphrase. And it's been a conversation at this committee on a couple of occasions, and it's been a conversation at board on a couple of occasions, and I do feed that back.
Okay, thank you for that. Paul?
Yeah, just coming at it from the cynical, suspicious accountant's point of view, the resources provided to the pension committee are charged to the pension fund. How is there no conflict of interest in assessing and agreeing and signing that off?
You'll have to trust me, I'm afraid. So by definition, you're right. There is a conflict of interest. I view it as my role to make sure that what is charged reflects what the pension fund has actually had. It is charged in arrears. So I'm the person that is receiving that invoice, and as an officer on behalf of this committee, I am looking at it and going, do I understand how that has been calculated, and do I think it's fair? If you wish to see that invoice and the calculations behind it, I would probably suggest that might be better done in a closed session than in an open session, but I am quite happy to do that.
As chair, I'm quite happy to open a closed session, as it were, at any point in the future. If we want to see that at a future
I
meeting,
suppose
I'm happy to request that.
the value of it is disclosed specifically in the accounts. If you bear with me for 30 seconds, I will tell you what this year's value is ahead of it appearing in those accounts. I think it's about that the amount I don't think should be confidential in any way, shape or form. So the total is £262,500. That includes costs in my team, costs in the corporate accounting team, which I'll come back to and discuss as part of the financial forecast. Some payment on to community governance for their support of the committee, and also a recharge of the payments we make to Caroline Burton as the independent advisor, which for simplicity's sake are done via SC's payroll and then recharged across. So those are the items, and as I say, the value is £262,500.
I'm just wondering, Chair, surely there's a recharge. This falls within the council's audit covers the issue of assurance, because council can't commit the fraud of overcharging, etc. So surely the assurance comes from there.
The assurance comes from me that the pension fund is not being overcharged. Should I do not put in the work to assume that to worry about whether the Somerset Council feels it's being it is undercharging. That I see that as a different part of the conflict of interest, and I concentrate on looking after the pension fund, and it is for other council officers to make sure that they feel similarly assured that that the council isn't undercharging, and I don't feel that it's correct for me to comment on that. Does that make sense?
Yes, I was just thinking it's actually a balanced transaction. There's transactions on both sides here, and one of them is definitely subject to a public audit and scrutiny. So you would expect, if one side of the equation is right and the two things balance, then the other side of the equation must be correct. or it's to the benefit of the pension fund.
And without going into specifics, again, a level of detail I'm happy to give in open session is the recharge is for the FTE equivalent captured is salary, pension fund, employers, NI, and then a apportionment of general overhead.
Abby,
Hi, thank you very much for that. Anson, the legal challenges, I expect most of it is to do with the fund payment. But how often do you actually get anything apart from that, such as, you know, the level of investment in other areas rather than renewables, for instance?
So I would have to bring in Rachel to comment on how often we get legal challenge around payment of benefits, because that would sit within Peninsula Pensions realm. Within the investments, I can only remember one instance where we had a legal challenge to us. It was a number of years ago now. It was a challenge in an American court relating to an American company we held shares in, where my memory is a bit hazy because it was a number of years ago. I'm thinking 6 or 7 years ago, where someone sued us for selling them the shares as part of a takeover. And it was a deeply unsatisfactory situation because we did take legal advice on it. And the legal advice was the amount they're suing you for, which I think was, let's call it $15,000 or something. We couldn't represent you for anything close to that little. So as distasteful as it is, because frankly, it felt like someone was just taking the mick. The advice was just pay the sum. As I say, it was a de minimis amount in the context of the fund, but it was a deeply unsatisfactory discussion and outcome. That is the only time I can remember us being legally challenged on an investments audit actuarial sort of basis. There's been a couple of times where I think a disgruntled employer or such has threatened such, but we've managed to end up by having adult conversations and getting around that. It's very rare. We do take part in class actions, so where shareholders sue companies for the inadequate actions of management in the past. In America, it's very common. Again, a far more litigious society. We've just signed up to allow our custodian to automatically file us for anything that we're eligible for, and from time to time we do get some money back. It's not a great deal, so that's another area of litigation, but that's us taking part in litigation against others rather than for ourselves. And as I say, it's a very passive way that we approach that. If you feel that's full disclosure, I can't.
okay. Any other questions? I can't see anything online. Yep. Mike.
It's just very quick question. So if you were ill tomorrow, who would you have lined up to replace you, and would they be up to the job?
So if I was ill tomorrow, the first thing is that I know it doesn't look like it, but a significant amount of my work isn't necessarily instantly time pressured. So
Okay, let me.
so
the
if
scenario is
but
you're
if I
out-
went on long-term
Yeah.
sick, then the most likely outcome is that someone would have to look at additional consultant support in the short term.
Are they easily available?
Investment consultant, they grow on trees. They are not cheap, but they grow on trees.
Okay, I never thought they'd be cheap somehow. I don't know
No.
why. But thank you. Okay, well, that's the worst scenario. Let's
Yeah.
hope you're never going to be in that situation.
But that is true to a greater or lesser extent of all of the 4 members of my team, because and that's 4 including me. We are not a big group. So, anything beyond a couple of weeks of staff absence will put strain on the remaining members. But in my 21 years of tenure, we've always found a way to cope. And we have had a couple of instances of staff being off for 6 months plus, either for long-term sick or maternity.
Let's hope it's not something we have to revisit.
I look after myself very well.
Good, yeah, good. I'm very, very pleased to hear it and much relieved. Okay, any other questions? I'm not seeing any. Okay, we're going to move on to item 11 on our agenda, which is the administration strategy statement, and we're going back to Rachel for this. Welcome again, Rachel.
Thank you. Okay, so I will give an overview of this paper. It's quite a long document. Well, the paper's shorter. There's a document that's attached. I'll give as brief overview as I can. And what we really need is for you, we're seeking approval from the committee that they're in agreement with the paper. So once I've spoken, if there's anything that I've been unclear about or you've misunderstood, then please do ask me and I'll try to explain a better way. Okay, so at the moment we have, as an administration team, obviously our priority is to provide the best service and most timely service to our scheme members. So we constantly review different working arrangements and delve behind the figures that I went over in the previous report to find out why items are on the reply due, why items are waiting that we can't action. So the pension administration strategy, there is already a pension administration strategy in place, which was previously approved by the committee, both for the Somerset Fund and for the Devon Fund. And what we're seeking to do is to make some amendments to the strategy just to make it more robust and give us a little bit more come back when employers are underperforming and not providing us with the information that we require to do calculations. So as I'm sure you can understand, in order that we can do the calculations, we have between the 2 LGPS funds over 400 employers. So we need them to be engaged with us and to work with us in order that we get the data about individual scheme members on time so that we can then ultimately pay individual pensions on time. So we have with me online my colleague Shirley Cuthbert. She has revised the paper and she's done most of the work behind this document. So I'm just talking, she's done the hard work. So the employer and communications team that fall under Shirley's area offer training, support and guidance to all employers. And the aim of this document is not to change that. So they will still work fully to support employers, provide the information and guidance that they need in order that we can engage properly and get this information for members. The problem we have is that not all employers are engaging with us. And some of those statistics that you saw earlier, where they're on reply due, have been there for some time, and it involves our team constantly having to chase that employer, send email reminders, telephone conversations to try and get that information from them. We're offering training at that point, and unfortunately, there are some employers that are just not engaging. So what we've done as a team is we've spoken to other administrators within the Southwest, particularly because we engage with them regularly, to find out how their pension admin strategies are worded, what they've included in there. So just to sort of confirm what the purpose of the admin strategy, it's a document that outlines the expectations of both us as administrators, what we're expected to do, and the timescales that we need to adhere to under the statutory rules, and also what our expectations would be for employers, what their responsibilities are, and what timeframes we need them to work to in order that we can satisfy the statutory timescales. So the other Southwest providers, the key difference has seemed to be that they've actually incorporated in their strategy what we also are able to do under LGPS regulations, under regulations 70 and 71, is to include charges or fines for where performance is not happening, where we're not getting information from individual employers. The rest of the Southwest administrators all have that in place as part of the admin strategy. And some of the feedback that we've actually had is that actually some of the payroll providers actually work cross borders. So some will obviously be the same ones for Somerset and Devon, for example. And payroll providers are under a lot of pressure as well. And if they're going to get a fine from one administrator and not get a fine from another administrator, i.e. ourselves, Peninsula Pensions, they're obviously going to prioritise the administrators that are charging. So the purpose of this is to get the employers to understand that there is a consequence if they don't actually engage with us, that they aren't providing the members or their ex-employees with the best service that they could do, and therefore we can't. And just to bring us in line with the rest of the Southwest administrators in particular, so that we aren't always sort of at the bottom of the list with that information coming through to us. So it's to bring us on the same level. So we've adjusted the admin strategy for both Devon and Somerset. I said Devon first because Devon have actually already approved it at their last committee. And the strategy is exactly the same that we've proposed for Somerset as well. We have made the key changes are the introduction of employer fees. Those fees are based on looking at the other administrators that have charges, trying to be consistent with those fees, because obviously if we went lower, we'd still find ourselves down the pecking order. So we've tried to be on the same level as the other administrators, and also considered how much an average person's time within our team it would cost to do a day's work, because it does actually go across all the levels. It's escalated when there is that lack of engagement from employers. What we'd like to do is to stop the team from having to constantly chase employers, and instead of chasing, getting zero response at all, what we aim to do is to put a charge in place, which is clearly outlined in the strategy, so that they will then be prompted to contact us. So just the other two key areas that have changed in there is we've added a communications policy. So Somerset Fund and Devon Pension Fund have their own communication strategies. As Peninsula Pensions, we've just added a paper within the admin strategy, which just is a bit more detailed for our team, because it's a little bit different for what the funds do to what our team do in some areas. So it just gives a bit more detail of how we communicate with members. So it's just to be a bit more open and transparent with how we do that. We've also included the introduction of small audits on individual employers and their responsibilities, just to make sure that where there is some underperformance, we can check that going forwards, or if there's incorrect data, that things have changed and it has become accurate for the scheme members. So just to summarise, really, we had a consultation with the employers, which was in November and December, ended at the end of December. We had 29 responses out of our 400 odd employers. So I suppose that sort of highlights a bit of lack of engagement in itself, or maybe we can assume that the rest all agreed with the strategy. I don't know, it could be read either way. Our key purpose of the paper is to improve the member service. This is not, I just want to emphasize, this is not a money making sort of scheme to benefit the administering authority. It's just covering our costs for that contact that we have to have with employers, the extra engagement. So they'll already get the training, the support, but if we have to go that extra step and keep contacting employers, it's to cover that cost really, and to be consistent with the rest of the Southwest. So during the consultation period, we had some really useful feedback from, although it was a few, you know, not a great percentage of employers, the feedback that we had was useful, and we have tried to compromise with some of the original information that was in the admin strategy. So for around things like, there's a couple of examples in the paper, I'll just give you one of the examples. With new joiners in the scheme, we have a statutory requirement to get information out to them within certain timescales. We have said to the employer that if they are happy to provide a link to our website, which has all the information on, that will mean that rather than them notifying us of the individual and all their information, we could assume that responsibility is with them. So we satisfy the statutory requirement, and we also help the employers because they can just add a link to the new employees information pack. So this purpose is really what I've just summarised. The key aim is for us to bring that 90, 92, 93% up and get more in target for the scheme members. And I'm happy to take any questions, but what I'm seeking is your approval for the paper, please.
Okay, thank you. I'm going to bring Anton in at this point. Anton.
Yes, Chair, as discussed with you previously, we have had representation from the pension board or members of the pension board that they would like to have another look at this at their meeting on the 14th of April. It's one of the things that's been just a little unfortunate on timing, that the board's last meeting was before Rachel could produce the final draft of the strategy, so they didn't get to consider it in its final form, due to the inconvenience of timing. What I would suggest, because it is this committee that must adopt it as opposed to the board, I would suggest that if the committee is content with it as written, that they delegate the decision to formally adopt it to you as chair post that meeting with the board, subject to whatever the board have to say about the matter.
Okay, Mike.
I was just to say, happy to propose that, Chair, to give you the delegated
And I'm equally happy to second that. It
Thank you,
seems the
Peter.
sensible way forward.
So, comments on the strategy? Are we content with the paper as is, and therefore hopefully now it's been proposed and seconded, happy with my signing it off at the appropriate time after that meeting, so we get everything dovetailed.
And obviously, if I can't imagine for 1 minute it would be the case, but if post that there is a significant rewrite, then obviously that might change it. And apologies, Rachel, I only sort of picked up on this in the last couple of days, so I wasn't able to pre-warn you. And
That's
I appreciate
okay, no worries.
it's slightly frustrating for you because you're going to have to wait a bit longer before you get a signed off strategy.
No problem. There was one thing I didn't add, which, if you don't mind, could I just add? So we also are going to, in the new year, we're going to be providing individual employers with performance reports. So for the first 12-month period, we're aiming to give each employer one report in 12 months, but the aim is that future down the line, they'll get a quarterly performance report as to timings of receipt of information, so that hopefully they can see that they're improving over time as well.
Okay, I think that would be very useful. Okay, we had it proposed and seconded, so I'm going to go to the vote now. Can I see those in favour of that, please? Can I see those in favour? Thank you. That's unanimous. Sorry, my apologies, Mike. Of course you can. My apologies. I saw your hand up. My apologies. Okay. Okay. Okay, well, that has been passed, so I will take that responsibility on whilst talking to Anton and Rachel to make sure everybody's happy. And if there are significant changes, it will of course come back. Okay, thank you. Thank you, Rachel. I'm sorry
Thank
that
you.
got both into that. Okay,
Thank you.
Indeed, and for those members that've been a member of this committee for more than a year, that you'll know this is an annual trawl that I force you through. So there are a number of items here. One is a financial projection for the 24-25 financial year. I call it a projection, not a budget, because the vast majority of the spend isn't really at our discretion. So to call it a budget would imply a level of control that is just not the case. But it is good practice to put it in place, and it's that baseline that we review progress against through the year. In the paper we saw earlier, referring to the outcome to December for the current year. There is then a sort of following a SIPFA review that was a number of years ago. It's generally considered best practice that you set an absolute return target for the investment fund. I referred to that earlier, of the one that's in place, and we'll come to the details of that in a second. And then the thorny question of whether the committee wishes to set itself some objectives for the year or some mechanism of defining success, which again I will come to. So if we take each of those in turn. So first, talking about the financial projection and resources in terms of what is committed by the council to provide you the fund, and to a certain extent to make sure you are happy with the resources provided to you directly as the committee. So looking at section 6 on page 123, obviously the benefits administration is provided by Peninsula Pensions, and you heard earlier about Rachel saying that they are currently fully staffed, and the proportion of, that they provide. Obviously they are considered a team of considerable size. Rachel will correct me, but I believe it's somewhere in the region of 70 FTE. And that is run as effectively a joint service with Devon. So the way we are charged for that is there's an overall cost of running Peninsula Pensions to the Devon Council. And the proportion of that is charged to Devon and charged to the Somerset Fund is based on membership, relative membership. It roughly works out at about a third that we pay for and 2/3 that Devon pay for. And any income that they achieve for services to the police, for instance, or as fines or whatever, goes off the overall cost of the service before it's recharged to those constituents members.
Okay, on that basis, bearing in mind that we are in the process of reorganisation and there will be a change in the number of employees at Somerset Council.
So it's members, not active members. So you would largely expect those that leave, certainly in the short term, to become probably undecided or deferred, and then, or a portion may become pensioners straight away, but they're not reducing the number of members. So that would not have an impact per se. And then moving on then to my team, you'll see that we're proposing a slight change of arrangements. So historically, certain elements of the accounting for the fund have been done by a different team within finance at Somerset. When we were all in the office, they sat right next to us. So it's the corporate accounting team managed by Paul Griffin. I know Mike is intimately aware of Paul. Sorry, that's an unfortunate choice of phrase. To correct myself, Mike sees plenty of Paul in audit committee.
I think you're in a hole, Anton.
So stop digging. Yeah. But it's I've always not been entirely in favour of that arrangement, because ultimately it leads me in a place where I am responsible for the creation of the pension fund accounts, and I'm responsible to this committee for the running of the fund, but I did not have management control of some of the people doing that. It's never particularly been a problem per se, but it always felt a bit odd. And we finally reached the point where everyone agrees that's a bit odd, so we're changing it. So currently one FTE has been charged to the fund from the corporate accounting team's budget. That budget, and indeed the individual, is going to move to my responsibility from 1st of April. In discussion with them and Nicola, we've agreed that actually an additional lower grade post is wise to provide that body of work. And so there will be an additional cost to the fund and an additional person, subject to actually me writing a JD, it being JE'd, and then us recruiting to fill it. So I'm not expecting from 1st of April that body to be in place to deliver that accounting work, and then sort of to amalgamate that within the team. To some extent, it's a small difference, but that does make us a bigger team slightly. And once we've bedded that in and those individuals and got that work specifically for the fund being covered smoothly, then we will sort of do a bit of cross-fertilization to make sure that we cover that work by getting our existing staff to understand some of the tasks, and also utilizing those bodies to provide cover for other tasks that they wouldn't be familiar with currently. So that will be a longer term project, but not at a specific high level. And I would specifically not say that is a long-term solution in terms of covering me. The grading of the post is not appropriate for that. So that is a change we would propose at the additional cost. I should point out that under the scheme of delegation, the exact amount of resource provided is delegated to Jason and then on delegated. But we obviously want you to be aware of what we're doing and to be happy with it, both in going back to that original question of you being comfortable that what's being charged is appropriate, and also you being comfortable that the resource that we are putting in place is neither too much and a waste, or too little and giving rise to risks. So that is the only thing I think I was going to say about resources per se, in terms of the resources provided to the fund in general. There is always an open question as to whether committee is happy with the level of resource provided to them to allow them to discharge their responsibility, which is largely how often you see me, unfortunately for you. But if you have any comments on that, I will happily take them. I will pause there before I sort of launch into other matters.
Okay, Peter.
Chairman, yes, so dealing with the latter first, I see no change in the committee cadence, and therefore there's good evidence that what works will still work. I also note that we're agreeing projection of resource need here, but it seems to me from the paper, and please correct me if I'm wrong, that whilst we are dedicating specific resource to the pension fund, we're not actually buying enough of that to cover all of the need, and there's still some shared pooled FTE content from the council. Am I correct?
Sorry, so to be clear, all of the people I've referred to remain employees of Somerset Council and will be part of that annual recharge. So it's FTE that will be recharged.
Yes, and I think we were both going to say exactly the same thing, which is the risk of any inequity lies with the main council, not with the fund. I'm very content. I think this is wise.
And I should say that on the basis that I have never managed directly these elements of work, I do not know whether 2 FTE is the correct amount or not. And there is although 1 FTE is currently charged and at a specific grade, the corporate accounting team has provided some work at a higher grade. And that resource in terms of individual person is not moving across. But I have had discussions with an appropriately graded member of my current team to ensure that they believe they have the capacity to pick that up. As we work through the year, I am sure that the level of capacity we have put in place will not be an exact match for what we actually do. By definition, there will always be a slight over or under provision of capacity. If that is sufficiently large for it needing to be addressed, then we will address that after we've sucked it and seen it for a while. And yeah, part of the reason for the additional capacity is effectively a certain amount of the capacity needed is linked to the number of individual employers. And with academies coming out of the local authority and each of those adding a new employer as it does so, the number of employers is inexorably risen. And therefore, it's probably fair to say that the level of resource that has been previously charged as opposed to provided was probably inadequate. So now we're sort of dealing with that.
Okay.
I'll move on to the financial projection as provided in Appendix A on page 125. So you will note, the first thing you will probably note is that the proposed projection of contributions is noticeably less than the current year. How I provide that is I look at the January level of contributions of all of the current employers and amalgamate that and use that as my base. For Somerset Council, I have specifically then assumed that we will lose 20% of those contributions by year end on a phased reduction basis. So month 1, April, I've assumed basically will be the same as March, give or take. And then there will be a gradual reduction such that March next year will be 20% less than it is currently. And along with other changes, because there are other employers coming in and joining, and and other employees gaining and shrinking, and et cetera, throughout the fund. That is the impact I have sort of projected. It's my best effort. That does mean that the chances of us being net cash flow negative next year are significant. I've said that for a number of years, probably without the significant. I've probably said it's evenly balanced, and you can see the projected outturn for this year is basically break even. And that does have slight implications in that at some point during the year, we will almost certainly need to sell assets to cover that cash flow shortfall. There's a lot of wailing and gnashing of teeth that goes on about this in sort of actuarial and local government circles, that somehow becoming cash flow negative is sort of tantamount to near death experience. It's not. We have a pool of assets to pay pensions. If through the natural progression of the fund, we reach a point where the payment of pensions outstrips our income and we have to sell assets, that's a natural progression. It places a slightly different view of cash flow for me and how I manage that. At the level we're talking about, it's a very minor adjustment. So I don't see it as something, it's something we will return to as a part of our conversation about investment strategy, but I don't think it is an element that you need to be specifically overly concerned with at this level, but you should be aware of it, and that is why I've raised it. Most of the other figures are broadly similar. I've reduced the transfer values received amount. Again, if a very significant employer in the fund, such as Somerset Council, is shedding staff, it is fair to assume that the amount of recruitment, which leads to transfer values in typically, is going to be muted. It will not stop, because some posts will need to be filled as other people leave, not linked to redundancy programs or stopping of services. And also, whilst the county council is a significant portion of the fund, it is not the entire fund. So that I have reduced that, but not removed it. And similarly, I've slightly expanded the transfer values paid. Whether I've done that accurately or not, I don't know. Those are very much, it's one of those things that you know there's an effect coming, so you pick a figure. Obviously, if there's less staff, there's less paying in, there is less long-term liability. There is also a possible impact in that any member of staff taking either voluntary or involuntary redundancy who is aged 55 or over is entitled to immediate benefits. So that's an instant impact to us in terms of cash starting to go out. Should the member choose to take that, it's not compulsory, obviously it's the member's choice. The fund would be compensated for that instantly by the council, so it will not be a cash flow hit to the fund. It may well be a cash flow hit to the council, but that's a different question. And obviously, at this stage, I have no idea how many redundancies there will be, as opposed to shedding of staff through other means. I have no idea what proportion of those will be over 55, although I would guess, having seen nothing at all, that a considerable portion of those that have put forward for voluntary redundancy will be those over 55. But we will, and obviously, as we work through next year and I provide quarterly updates, and I'm hopeful that MSD will be much more up to date and will allow me to do that on a much more timely basis, we'll be able to monitor that effect as it flows through next year. And you will also note that in the management expenses column, there is a reasonably significant uptick Some of that is the rather minor points that I've already raised. Some of that is in further costs at Peninsula Pensions due to a little more resource, but also mostly just inflation. But also the investment management expenses are largely linked to the size of the fund as well. So an 11% increase in the size of the fund during the last year, well, that was investment return rather than increase, but the two are not dissimilar. All other things being equal, we'll see a similar rise in cost base. And I suppose, sorry, just to go back, the recurring pensions, obviously that's increased. That largely reflects the 6.7% CPI inflationary uplift in pension payment that will be given to all pensioners from 1st of April. That being the September CPI figure. That's entirely standard. And I shall now pause for questions.
Okay, Mike Hewson's first. Mike.
Thanks, Anton. Can I just test my understanding, please? So as the amount of contributions from members of the scheme reduce as the number of employees of the council reduces, will that mean that Somerset Council then has to increase its rate of contributions to meet the shortfall in the long run?
No. So there is two elements to what all employers pay. One is for an additional piece of service. So assuming the employee is there for the whole year, an additional year's service, and there isn't a cost to that. And then a payment to make up any historic deficit, which broadly speaking occurs because the actuary's assumptions were not borne out over a period of time. I mean, largely speaking, our deficit is related to the 2008 financial crisis when markets crashed by, I think peak to trough, it was about 30%. Obviously, our assets disappeared, our liabilities didn't, and we've been paying catch up for 24 or 14 years since. So now that element is not specifically impacted, although it is impacted by other factors and will be revised from the next valuation. The bit that's for ongoing service is charged as a percentage of pensionable pay. As I said earlier, for Somerset Council, it is currently 20.1% of the employee's pay. So as the employee ceases to be an employee, that 20.1% is no longer paid because the liability is not being added. And all other things being equal, that has no impact on the fund otherwise. And one of the reasons why we charge the deficit recovery as a pounds amount rather than a percentage of payroll typically is because we went through a period in the past where payrolls were shrinking, and we got to the next valuation, and lo and behold, the actuary said, you've not been paying enough deficit recovery payments. And so we worked that through with the actuary, and we switched to paying lump sums so that we don't get into that problem.
I've got a quick query on redundancies. I've still got the scars from a previous redundancy package for within local government, where the costs were indicative of one figure, and the actual was some 5 or 6 times as much, which is a huge change. And I remain concerned that if one pays any attention to the press speculation about the numbers involved here, we could be looking at some quite large movements, quite large changes. I want to be content that we are in a position to deal with that, because if you're talking about staff over 55 years old or over, they are entitled to take and their pension is made out, etc. Oh, I'm so sorry. My apologies. Sorry, Mike. And I'm just like to ensure that we are comfortable with where we are.
From a fund perspective, not our problem. I appreciate your concern with an SC hat on. I cannot answer those questions. I would suspect that you need to approach the correct scrutiny or audit committee to have those conversations with Jason and Duncan Sharkey in them providing you with the assurance you are seeking.
Thank you for that, Anton. Mike, a conversation you and I will have outside of this room. Michael.
I'm aware that we're potentially losing up to 1,000 staff, and as a result, borrowing £40,000. Sorry, I wish £40 million in order to help mitigate the cost to the council, and that cost is within that 40 million. It's the cost of making people redundant. How does that take away the impact from the pension fund because we're not paying extra for those redundancies? I'm not quite sure where that 40 million is going.
So again, I will give a partial answer, but it's more a question for Somerset Council. There would be two elements to the redundancy cost. One would be the redundancy payment for loss of office, and one, where applicable, specifically most likely for those staff over 55, the additional cost of providing the pension early is charged by the fund to the employer. So under the rules, if you leave at post 55, you're entitled to benefits. So instead of taking your pension at state retirement age, let's call that 55 for the sake of argument, you're taking it 10 years early. There is an explicit cost to providing 10 additional years of pension. And that cost is charged by the fund to the employer. And therefore, the cost of that should be part of the figures you're being quoted by SC as the cost of the programme.
Right. That's in the terms of an early redundancy, where someone elects to take their pension early.
Yeah, that is hard coded into the LGPS regulations as laid by Parliament.
Okay.
That entitlement.
And that's going to be funded by the council itself and not this pension fund.
Yes. So that is referred to as strain cost, and that is, I mean, this is not the first time it's happened. Funny enough, and indeed, in small ways, it's happening all the time at various different employers, and it's a part of the work that actually corporate accounting was doing, is coming across to me to identify that and to raise the invoice and to send it out.
Okay, thank you.
We'll leave all, assuming there aren't issues, we'll adopt everything en masse at the end. So the next thing is the absolute return target. As I said earlier, it's good practice to have one. I've always deemed it sensible to suggest and recommend that the target is explicitly aligned with the assumption made by the actuary. That is the 4.6% I referred to earlier under item 6. And it is my proposal that you continue with that 4.6. As I say, it's consistent with what the actuary is looking for, and it therefore brings added relevance both sides. Happy to take any questions on that. And then, no. So then just the final, as I say, thorny question is as to whether the committee wishes to set in any specific objectives for itself or any targets against which to measure its outcomes. Again, this was a suggestion of SIPFA as best practice. I've raised it annually since. I think it's fair to say that committee has consistently declined to set itself such metrics, and it's for you to do for your benefit. It makes no difference to me whatsoever.
If it's a SIPFA recommendation, are other pension committees and other authorities taking them up on that recommendation? Because to be honest, I'm struggling to see what objective measures we would be able to set, because ultimately, you know, we're reviewing the performance of the fund, not the performance of the committee. It's difficult for us to disentangle those two.
You do an element of it in by agreeing the business plan and having those discussions and adding anything of interest or worry to you to that business plan, and me making sure that anything I am aware of that you need to do is on that business plan. And we do measure within that paper that things that get put onto that business plan do actually get done, be it on time or delayed as applicable. So an element of it is being done, and I think that is probably sufficient for the committee to say it's not ignoring SIPFA's recommendations. Whether you specifically want additional targets for yourself, as you say, it's difficult to see what it is. I, as an officer, am making you aware of it and I'm prompting you, but as I've said also, we've not felt the need to do it in the past. I'm struggling to think of any repercussions of that. I have to say, I haven't specifically engaged with my colleagues at other funds to see if they go further or not. I will do that piece of work if you specifically wish me to, but otherwise I've got plenty to be getting on with.
I think if you're having a conversation anyway, it's worthwhile just saying, look, is there anything that we might be able to pick up here as best practice? But Anton, I wouldn't want to add to your working day, to be honest. I don't think it's going to add an awful lot of value in terms of the performance of the fund or the committee, to be honest.
And it is a prompt, as an annual prompt, just to sort of, this paper is to both in terms of saying, are you happy with the resources we provide as officers, the committee services? It's a prompt to say that, generally speaking, are you happy with how things are going? Not in terms of a specific item, but in terms of how this committee functions.
Okay, next two councillors are John Cook-Wilburn, followed by Peter.
Thank you. I think we stay as we are. It sounds like an awful lot of work to get nowhere, to be honest with you. So I'd be happy to stay as we are with that.
I rather think our issue here is one on the agenda, in as much as I agree with the point made that we actually do manage this through our annual work plan and through the forward plan of meetings. And through the regular cycle of monitoring. So we're doing it, and the difficulty is it's appeared as an item on the agenda, not that it's not being done. I think what we should probably do is minute the fact that we feel we are doing this through the annual plan and through the cycle of monitoring during the year, and that's how we discharge this duty.
And that you feel at this stage that is sufficient.
And that we have an annual opportunity to adjust that, and it occurs when we decide the matter of the annual plan.
Indeed. So I'm effectively asking you to collectively agree to adopt the financial plan within the context of it, how it was presented, to continue to adopt 4.6% as the absolute return target, and that you are, as per the suggestion minuted, content with your current operation and practice.
So proposed by Peter, seconded by Mike. Can I see those in favour, please? That's unanimous. Thank you. Thank you, Anton. To item 13 on our agenda, which is the investment of pension fund cash.
So, as those of you that are county councillors, sorry, I shouldn't have, I've done it, haven't I? Somerset councillors, square box, Yeah, and almost a year. You sign off the Somerset Council Treasury Management Strategy for the year as part of managing that function. And to a large extent, this paper is analogous to that. So I'm asking you to, on the basis that this is a function that is specifically managed by me and the team, it's not done by Brunel, it's not done by an outside manager. I do ask you to just reconfirm that you wish us to continue to run it within the team. There's not a presumption that you do, although we are more than happy to continue to do so. And also to put similar guide rails in place that are in place for Somerset Council or the PCC, for whom we do the similar. I should just within that, one of those guardrails for Somerset Council is a limit on the total amount of borrowing we do. We do not put in place a similar limit in this paper, but by context, I don't think for cash flow purposes we've ever borrowed for the pension fund. It's clear that if we do borrow, it is for cash flow purposes, short-term cash flow purposes, and that we should seek to remove that as soon as we physically can. That is explicitly within the strategy. So it seems odd to put a quantum on that because that would just limit us unduly. As I say, I don't think we've ever borrowed short term for cash flow for the pension fund. It is an explicit requirement of the regs that we cannot borrow from or lend to any of the employers. So whereas I sit managing Somerset Council's cash and the pension fund's cash, we are forbidden by the rules to go, well, the Somerset Council's a bit short today, we'll lend them from the pension fund or vice versa. We cannot do it, we do not do it.
Okay, PCC followed by Michael Dunk, please.
Yeah, yes, thank you. We've discussed at length the issue of the borrowing limit. I noticed within the counterparty limits in the Annex B, there is a £10 million limit on the amount of maximum deposit with a counterparty. Two questions. One, have we ever been near 10 millions? And second time, when did that number, given the ever increasing scale of the fund, is that number still appropriate?
So the first part of that question is easy. Yes, frequently. But that's part of our overall management of the fund. So a significant portion of the cash is always held in instant access money market funds to avoid us the need to short-term borrow. And because they tend to provide a return that is as good as or better than deposits of usually up to at least 3 months, and then sometimes considerably longer, depending on sort of the underlying investment situation. And obviously those money market funds are very liquid and very, very diversified. If we have £35 million worth of cash, we may well choose to only use 4, and 3 of them we may well use up to the full 10 million. But that doesn't, that doesn't mean that we've got access to 7, I think, and we've never been full with all of them. So it's at our choice rather than because we have a particular issue. The 10 million is set because I have a conversation within the team of, does that still allow us to act without undue restriction, but also manage our exposure to individual counterparties appropriate to the amount of cash we tend to have. So, and if, yeah, if we, there is a specific rule that if we have less than £10 million, we still have to spread it across 3 counterparties. So we can't just get to the point where everything is with one counterparty if we managed our cash that tightly, which is not my ambition. So it's 10 million because we feel, one, that's what it is last year. So we're not proposing anything different, but because we are comfortable that that still gives us the balance between not giving unnecessary concentration to the fund, but allowing us sufficient flexibility to do what we need to do. And that is lower than Somerset Council's level because we typically have less cash investments, partly because for the pension fund, one of the considerations is, well, we don't want cash to get too high, because if cash gets high, then we should just move it to one of our other investment opportunities. Whereas with Somerset Council, there is considerable restrictions on how far we can go outside of cash type investments. So it's actually a more restrictive policy because the answer should be, well, invest it in equities then, or bonds, or whatever else.
I noticed you haven't produced a list of the banks and countries or even councils that you habitually use. Would that be something that you would be able to circulate to us? I think we do it at the main council level, and we have in the past ruled out certain countries where we feel there's a human rights issue, or where they're certainly not democratic anymore. I would cite Hong Kong as one example, and I think some of the Saudi Arabian sort of area countries have got a very poor human rights record, so we probably struck them off the list as well. Do you actually have an approved list that you could circulate, or?
I do. The simple answer is that because the Treasury function is exactly the same people, it's not, so the person who does the transactions for the pension fund is the same person who does the transactions for Somerset Council. Different transactions, but the same people, and they do it for Avon and Somerset PCC as well. You know, someone does that every day, and I get 3 sets of papers to check and sign off every day. Funny enough, the criteria we use for what is an appropriate counterparty or not are exactly the same for all. And the process for signing them off and adopting them all are exactly the same process. So for it to be used, one, it will be covered by Somerset Council's Treasury Management Advisors and on their approved counterparty list. It will explicitly be adopted by Jason at the first point of investment. It's not then every time we add money to it or take it away, we re-ask Jason, because that would be administratively mad. So he approves the use of any new counterparty at the time it is first used. And then that's part of our regular monitoring and production of papers to Jason. So again, I produce papers that go to Jason and Nicola every month that shows exactly who we have money with at any given time.
So basically any change in policy regarding the strategy would have to be done at council level?
We do not, within the strategies, so the Treasury Management Strategy as signed off by Somerset Council and this one here have any specific restrictions. So there is not a list of countries or individual counterparties that is ultra-virus in terms of what council has allowed us to do.
Okay. Yeah,
That decision is delegated to officers.
apart from the Moody's and the sort of credit rating that the agencies give countries, apart from that, which I think you do have a minimum for, don't you?
They also, the counterparty in question also has to be allowed to take deposits within the UK. We do not place money overseas. So it has to be within a UK jurisdiction. Now, that might be a UK branch of that bank. To be honest, by the time you look at Arlene Close's list and what we as officers are comfortable with, the reality is that banks that we've ever used, bearing in mind that in the last year, the vast majority of deposits have either been with money market funds, which will have their own rules, although we are able to see what they invest in, but we aren't able to specifically interject in it. We've placed very little with banks anyway. Most of the deposits have actually been with other local authorities. Historically, the banks we have used are fairly limited in terms of the countries they originate from. So obviously, UK banks, UK domiciled banks, properly domiciled, so not just the branch or anything, but the full kit and caboodle. EU country banks, or I suppose technically I should probably include EEA, so you might include Switzerland. Historically, at one point that did include Iceland, unfortunately, as well, but that's a rather historic matter now. So yeah, from time to time, specifically, we've used Svenska Handelsbanken, which is the largest bank in Sweden, Nordea, a couple of German Handelsbankers or Landesbankies. That tends to be the scope of it. I don't think we've ever placed anything with Italian, Spanish, Santander, strictly speaking, as the UK entity is ultimately owned by a Spanish bank, but Australian banks, so Australia, New Zealand Bank, Commonwealth Bank of Australia, Canadian banks from time to time, and Singapore banks. That is the extent of it.
Okay, I just wondered if there was I mean, the list is available from the council, I think.
Yeah, I mean, I can, if you specifically want to see the list, I will share it with you.
I don't know. Yes, I think I would have to raise my voice at council when next time they sign off that particular list. I don't think I did it the last time.
They do not sign off the list. The list is provided for information.
Right.
The counterparty policy defines, again, this is operational, because we don't want to have a situation where, let's say, Lloyd's splits in two. Well, the idea that we've got to wait 3 months to go to full council to add the two parts is not sensible. So you sign off a criteria, and as long as we stay within that criteria, the delegated responsibility is Jason's to sign off new counterparties. That is explicit in the policies.
Okay, I think that's enough, because I think I have to take this. Taking it further, I'd have to take it further and ask Jason.
No, look, if you wish to put an additional restriction in place for the pension fund, then this is the time to do it. If you wish to put in place a different restriction for the council, then that's something you'll have to go to elsewhere.
Okay, well, I mean, there are some countries I probably wouldn't want to invest in, and that's possibly the same for all of us. And whether we take an ethical view on that is up to us, I suppose.
But the reality is that Russia ain't coming anywhere near us, and if it did, we just wouldn't touch it as officers.
Yeah.
And frankly, I'm aware that at points in the past, some Middle Eastern banks have been used. I think there was a period where a Kuwaiti or UAE. Frankly, again, they don't have the best rep. We as officers just won't do it.
Fair enough. I just thought it was something worth thinking about. But anyway, I don't want to take up our time with it.
Yeah, thanks. I appreciate that. That what seemed a bit tortuous, but I'm grateful to Councillor Dunk because I think that is important, and there is a difference between the pension committee and the council, and I think we should have that clarity that we're not just simply.
Obviously,
you have great history. You've explained how it happens, but we do need to understand to be clear on the process. So I am grateful for that, and it would be good if we could circulate that for information.
And obviously,
So
there is a benefit to us as a team if the rules that we apply to the fund, the council, and the police as well are broadly aligned. They are not the same. We have different counterparty limits because they're different sized organisation. The pension fund, as I said earlier, has a more restrictive list because we shouldn't be taking risk in cash. If we want to take more investment risk, we should give that money to Brunel and for the investments we've agreed. But there is a definite benefit to having the three broadly aligned.
I just wanted to make a broader point. I mean, notwithstanding the duties as a pension committee, I've yet to hear somebody actually attempt correct a defensible policy. The difficulty with going by nation is you're damning. That's past punishment, if you like. It's everybody wearing that flag or part of that flag gets damned because of something a proportion may or may not have done. I just think that's difficult, ethically. And you have to be a lot more precise than that if you're going to write a policy. It has to be ethical on both sides. You're not accidentally punishing your pensions by giving up something you should have been able to access because it was an ethical investment, but the pensions committee wrote an overburdensome policy, etc. So I just have difficulties with this, and I think it's not really mature enough to come to committee as a thought. But perhaps we want to consider if there are ways in which we could be more ethical within the framework of the local government pension scheme. But I think it's just a messy argument if we try and have it here in committee because, we're taking decisions being quite formal and evidence-based here. And actually, I think we need to be really precise as a group of committee members what it is that we're after, and that probably requires a degree more offline debate. So I'm wondering if maybe we ought to touch on that dimension through the year as part of our offline work.
So we will, because the fund's ESG policy is part of the investment strategy statement. So therefore we have to go through that hoop, as it were, and at least reapprove what is currently there as a minimum. So that process, in a general context, that needs to be seen as something for the whole fund, not really specifically for cash. I should also point out, I cannot remember for the life of me where it is in the legal journey, but government has certainly drafted regulations which forbid local government pension schemes from making decisions about individual regimes that are not specifically aligned to UK government policy. So in simple terms, you cannot say that we as a fund will not invest in a given jurisdiction unless it is on a government banned list. So you could probably say Russia at the moment, but possibly North Korea, which is completely uninvestable anyway, so it's irrelevant. there might be somewhere else. But that, if you want to say as a committee, we will not invest in France, UAE, America, Brazil, I think you will find that either that is currently ultra-virus or the government is determined to make it so very quickly. So please bear that in mind, because obviously one of my roles as an officer is to keep you legal.
So you're
That's
saying,
not to say we will invest in those states.
no, but
That is to say that we cannot pass a resolution of this committee stating that that is an objective.
Yes, I think if I caught you investing in Russia at the moment, we might have to remind you what's legal since it's formally sanctioned. But that's the point.
it may be that the next government might have different views on what they think about that. And I think governments tend to be a little bit blind when it comes to dealing with other countries where we've got vested interests, and it's not in our interest to cut them out from our decision making. And that's why the government are probably saying that, because we have other interests besides the ethical ones that one might consider. And that trumps, sometimes, unfortunately, trumps the gut reaction to dealing with some countries, which I would have.
At the end of the day, as I said, I'm just trying to keep you legal. My view is it's ultra-virus to say so. So irrespective of how we then deal with it underlying that, we cannot ban, we should not go there in terms of a restricted list of countries or anything as this committee.
Just wondering how we got round that at Mendip. We must have just not decided not to use them rather than deleting them from any list, I think.
It's an LGPS thing. It's specifically targeted at the LGPS, not at councils in general. I couldn't comment as to whether there is a similar restriction on councils. If there is, I'm not aware of it. So, I mean, it's in cash terms, it's actually quite difficult to do. In the wider fund, it becomes a much more live issue.
Thank you, Chair.
We're here to ask the questions, you know?
If there are no further questions.
Yeah, right. Michael.
It's under any other business, really. I just wanted to ask.
Sorry, no,
we haven't
specific
reached
to this paper.
We haven't
sorry.
reached over.
Well, I
yet.
have one.
I'll come back to you. I'll come back to you when we do. Peter, did you? Right. Okay.
Yes, I was
So-
going to say, if everyone is content now,
Fine.
can you reappoint me and adopt the policy as per the paper or otherwise?
I would move from the chair that we reappoint Anton and go with the paper. So can I see a vote on that, please? That's unanimous. So there we are. You retain the confidence of the committee, Anton.
Thank you.
Yeah, as I said,
It's not
please
just
keep
me,
us legal. Please keep us legal.
It is the team as well.
Yeah, absolutely, obviously.
And specifically in terms of treasury, because Alan does most of the work, not and the heavy lifting, not me.
Indeed so, indeed so. Okay, moving on questions of under item 14 on our agenda, the any other business of urgency. I've not been notified of any, which is what I would have expected. However, if there are questions, I know, Michael, you want to ask a question or raise something, so please do.
It's not really a new subject or anything. It's just a clarification of the communication strategy, which is going to be reviewed in the summer of this year. But I can't see it on any of the scheduled meetings as an agenda item. I wondered if it would be in June.
Plan A. All plans are always subject to change. But Plan A is that it is covered by the fund policies item for that's in the work plan for the June meeting.
In the 14th of June, yes?
Yeah.
Yeah, okay. I thought they might be in there somewhere, but under a general heading.
It's fund policies.
Okay, thank you.
And as you say, Plan A is that it comes in June. It's possible that it might slip. I don't want to set hairs running.
It's not my plan to let it slip, but I
didn't
always,
think it was. I'm just always cautious when you describe something as Plan A or a specific date. I appreciate that it might not happen at that given date.
as ever, the ultimate issue there is my resource to produce it.
Busy doing something else by then. Okay, ladies and gentlemen, unless there's any other queries, I'm not seeing any hands up. I'm not seeing anybody requesting to talk on any other subject. So with that, I'm happy to close the meeting. And thank you all for your attendance today, both in person and online. And have a good weekend, one and all. See you all next week, I'm sure. Thank you.